Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. I'm not going to ask you to do it. Just look at the prompter below. Promise me you'll keep doing it and I'll stop asking for this week. All right, let's get to it. Look, today is brought to you by Money Moves. Money Moves, we will talk about that later because we are making money moves and positioning ourselves while I am teaching options for dummies. Let's go right into it. Dow falls 900 points as market sell off after historical rally. So the market gives, the market takes away. Now, there's a lot of things that's happening, and there's things that's happening behind the scenes that is not just right in front of our face. Remember, I always say the market, whenever there's a lot of data that comes out, the market generally needs 24 to 48 hours to decipher what it just heard. And so that's what's happening, good people. It gave back, the market gave back half. At one point, the Dow was down 2,100 points. Okay, so the market was trending back down because it's open-ended. A 90-day pause is not what the market wanted to hear, regardless of what you and I wanted to hear. Okay, so that's what's going on, good people. I got a few things. So you got Wall Street whales, you got Wall Street and whales that are, it looks like they are, again, this is something that happens all of the time where they buy the dips and sell the rips to make up for their losses. Follow? So goes down, they'll buy a little, and then it goes up, and then they sell. And for the ones that didn't sell, that got caught in the fall off, they're waiting for the first rip to sell. And so there was a lot of selling going on yesterday, but I see opportunity. So now, if you saw my live yesterday morning, I was yesterday afternoon, I was excited when I looked at my portfolio. It was up, up, up. Then I came back and made the video, my second video, which was actually my third video. And I said, guys, if you're happy about this, pump your brakes. You know, anything could happen. And I was showing you guys the pre-markets, and I was saying anything could happen. This could turn around, and it did. All right, leave me a coffee cup if you saw my last video from yesterday. And I also said that in spite of that run up, that's not all they took from us. That's not, we're not selling for that. We're in for the long run. So look, yields, the bond yields, bonds are not easy to understand. Bonds are up, okay, the yields are up, and when the yields go up, equities are usually down, spiking, all right? Sometimes they move in lockstep. But the president and his cabinet believe me, you are keeping their eyes on the bonds market. The VIX is spiking right back up into the area that you buy, all right? So I'm going to show you where today it was saying that it was a buy. But there's a mental problem that you and I are going to suffer now, okay? And we all need a little Xanax, and so does the market, because it's going to make us bipolar, but this is not going to happen. Now they're talking about 145% tariff on China. That's where we are now with all of these reckless calculations, all right? So listen, I can tell you what's going to happen next. The president is going to start putting pressure on the Fed. You know, he's already done that, but he's going to start putting more pressure on the Fed. And this fight ain't the Fed's, right? The Fed can't just come and start lowering rates just because the president wants it, all right? And so he has to be data dependent. So this battle right here is all about tariffs, okay? So you got Goldman Sachs that lowered their probability of a recession from 65 down to 45, which is still high, right? So the market was reacting off of 10% overall tariffs, but the reality is we still have 25% tariffs on goods and services that we use every day. All right, we're talking about autos, steel, lumbers, and other material. Okay, so these are the things we use every single day as I battle with these new glasses that are a little stronger than the other ones. Okay, so when I look at the screen, when I look at y'all, it's too much. And I look at the screen, I need them, right? So I'm sorry. Somebody said my biggest battle is trying to find out. All right, let me challenge you guys on this. Let's go here. All right, let's look at this. And as we could see, the market yo-yoed today. The pre-markets are sold off as we had CPI, Consumer Price Index inflation, that came out this morning an hour before. So if we had CPI today, we'd probably have PPI on tomorrow. I didn't check, which is Producers Price Index. So today we had Consumers Price Index. What we consume, tomorrow will be what they produce, okay? And so you're going to see next month CPI really skew. And then the following month's consumer price really skew, because inflation goes up, we buy less, CPI is going to start pulling back. We're going to start holding our money. Follow? So here's what I want to challenge you guys. And I dropped this in my money moves earlier today. We had this sell-off that was just tanking, okay? I got the S&P and the NASDAQ going down, 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 down. Then it bottomed out. When it bottomed out here, that's when the VIX was, let's see if we can add the VIX. Let's see if it will let me add the VIX to this mix. Okay, so you could see it skews everything. Let me, so you could see that the VIX, let's see, 62. All right. So you could see that the VIX, which is the bright yellow, right? You could see when the market dipped the most, it was up the highest. See that at the bottom? You could see that the VIX was up 62% in the 54, right? For those of you that don't know what the VIX is, it's the volatility. It's a volatility index. It measures volatility of the markets. And when it spikes up, the higher it gets. We'll look at it separate because it skews this, okay? So this is when the VIX was the highest. And for those of us that are long like me, that's actually a sign to actually start buying, okay? And so I want you guys to remember that for the next couple of weeks, because we got time. And so now it went up, faked out, came back down again, and now it went all the way back up to where it was this morning. Look at that. And now it's starting to cool off as the president is in his cabinet is talking. This president loves the TV. It's the facts. He loves his name being mentioned. And just like the Fed, I'm just sorry. I know some of you guys are going, Larry, I can't believe you said that. Just like the Fed, sometimes you just want, just shut it, because every time it moves the market. Yeah, we had a good day yesterday. Even his cabinet was surprised. Let's just keep it real. Even his cabinet was surprised. And that's what the market does not like. The market does not like uncertainty, good people. Whether it doesn't matter who you in for, the market, your money don't like this uncertainty. So now let's go back here. Let's go back 5 days. And this is what I was talking about on yesterday's video, when after even I was excited that morning, and I came back and I was like, we better be cautious because this could happen, right? And so here we go, boom. Then we had the run up after the announcement, and then it cooled off a little bit and then ran back up. Remember, I went 3 times yesterday. I was on for 18 hours. And then what? Then we all came back down today. Boom. But here's what I'm going to show you. Even when we had the run up. So here's the run up. Okay. You guys see that April 9th was the run up. If you go out a month and you go to April 9th, that run up is still grossly below where we were. Here's the run up and here's where we are. So don't be a sucker and fall for someone, and I'm just talking about the market right now, so don't get excited. Don't get too pumped. Even I got pumped in the morning when somebody takes $1 from you and gives you 50 cents back. And so that was the reason why I made my second video, and some came and said, Larry, you're too bearish. But no, If you are cool with somebody taking $1 and giving you 50 cents back, then you can't count. And I can count. So I looked at my portfolio just like many of you did. I saw what it was yielding and I was like, thanks for that. But where's the other half? All right. And not only that, then we want to prosper from that. So look at Bitcoin. Came down. We were at 82 yesterday. Now it's back in the 70s. We could see this is a yo-yo, right? And I know a lot of you guys are like, I am ready to get off of this ride. So we could see what's going on right now. I'm on a daily right here. Now, the truth be told, and someone going to say, Larry, you're too bearish. No, I'm a realist. The truth be told, depending on the news that comes out of the White House, we could see this was yesterday run up. Bam. Ran all the way up. This is the S&P. This is the SPY, right? This is the S&P. So let's just make sure we are good. That's the Q. All right. Let's do the Qs, and then we'll go back to the S&P. We'll go back to the SPY. All right. Let's see here. There we go. Let's do the SPY first. 500 companies. We had this big green candle yesterday, spiked all the way up. Right. We went from 493 all the way up to 548, and then boom, right back down. And now look at that wick on this candle here. Look at where we are right now. Okay. So you guys know how I am about the 200-day moving average. I start buying once we touch or go beneath, and we fell way beneath. We had a green candle, and now we are indecision, if you ask me, because it doesn't know what it want to do. Okay. And so that's what's happening with that. And then when you take big tech, QQQ, here we are, QQQ on the daily, same thing. All right. And so this is what I challenged my money movers, and I'm going to challenge you too. I'm going to challenge you to keep your eye on this also. If you were buying, if you said, oh my goodness, I felt, why didn't I get in on this? If you're questioning yourself, why didn't you buy this? Why didn't you buy down here? And you bought and you start buying. Some of you, tell the truth. Some of you, after this little pullback right here, you start buying here. But then when it came down here, you didn't want to touch it. And I'm telling you to fight your emotions. Fight your emotions and do the polar opposite. So if you're going to start nibbling, you want to nibble down here. And a way you want to check that out is just check the SPY. Check the VIX, should I say. When it spikes up like this and it just starts running up and everybody else is scared money don't make money, that was the time to buy. Because if you put the S&P there, you could see that the S&P is the yellow at the bottom. You could see at its lowest, the VIX spiked the highest. And so, again, this is a hard lesson. Even me, even today, I don't always move right, but it's a hard lesson to buy fear and to sell greed. And so I'm telling you, we're talking about 90 days. And now the president is talking about extending the 90 days. There may be an extension. He did not rule out the 90-day tariff. Let's listen.
To see at the end of the 90 days, will you put those higher tariffs in place, or will you extend?
Well, that's what would happen. I mean, if we can't make the deal that we want to make, or we have to make, or that's good for both parties, it's got to be good for both parties. And then we go back to where we were.
Go back to the numbers that you announced last week.
I think so.
You wouldn't extend the pause.
Yeah, we'll have to see what happens at that time.
Thank you, Mr. President. You said yesterday.
So that was that, good people. That was that. So I'm just telling you guys that this is going to be a long, bumpy road, and you got to be prepared. And if you're long like I am, then you will start to look at when should I have bought. Okay, let's go back to the S&P. When should I have bought? Could have bought here, could have bought here. Trying to time the bottom is no big deal. So when you have a low and it comes back and you have a low, then it comes back and you're getting higher lows, and even intraday, consider. Now, what I would say is leave enough money. This is going to sound crazy. to last 90 days. I don't care if it's $5 a day. You got to last because now it's open-ended. And so the market doesn't like that. It's an open-ended 90 days, and then he could extend the 90 days. So this is going to be a bumpy ride. But in conclusion, I'm telling you guys that I don't know about you, but even with the market way it is, this market owes me at least 10%. Okay, that's 8% in the last month, right? And so when in doubt, zoom out. Look at that. The S&P is still down 14%, all right? So you've missed nothing, absolutely nothing. And when it comes to the NASDAQ, which is tech heavy, we are still down 18%. So I'm looking to make 25% in months and years to come off of dip buying at the right time. How about you? That's what I want to say to you guys, all right? And so it's going to be a long, bumpy road, good people. And you got to hold your nose and buy on times like this and on the right days. When there's fear in the streets and it's absolutely tanking like today, and there will probably be lower lows. And let me prepare you for the bad news. We could test the bottoms, which was before the president made the announcement on yesterday. We could retest those lows and anything could come out of the White House, right? So we're planning, but we have to be ready to pivot now. Now is not the time to say, Larry, a week ago you said this, or a month ago you said this, because we don't know what's coming out of the White House. Literally 5 minutes from now. And as you could see, that camera there's breaking news every 5 minutes. You remember the last time he was in the office, it was breaking news every day. And that's what he loves. Whether you hate him or love him, that's what he loves to do. And let's just call it what it is. It's going to be a bumpy road. Now, at the end of the day, if you don't like him, you can be mad, but I say get even. And at the end of the day, if you like him or love him, make money just like he's making money. So I'm here for both of you guys, all right? So, hey, I dropped another class last night in Money Moves. We got the options classes going really well. Again, it's going to be the only link below. If you're on your phone, go down to description and then hit more. You'll see the link. Just tap the link, get right in, and it does not connect to a Patreon. Once you click in, put in your information, you're in. But we are learning and earning together. I have 2 classes in there. I'm going to get another one, and then I want you to study everything over this weekend. Generally, I teach on Tuesdays and Wednesdays, but this week, even with all of this stuff, I'm giving Tuesday, Wednesday, Thursday, and then next week we'll go to Tuesday, Wednesday, but I want you guys to get it. And May Day, which I believe is May 1st, will be in the markets. That's what I'm shooting for you guys to be actively in the market. Again, this is not for professionals. This is for those of us that are dummies. Remember the Dummies book? That's what this is for. Everyone can understand it. Talk to me like I'm 3. I want to be clear on that. So we are learning and soon to be earning. So when the market goes up, we're going to make money. When the market goes down, we're going to make money. We're going to make money every single trading day, or the ability to make money. All right. Now, that's what we're going to give you the tools to do that. All right. And what you do with the tools is going to be up to you. But we're going to make sure you learn the lesson. Right. We'll see you tomorrow, good people. We're going to see what happens. All right. It's a yo-yo ride. It's a roller coaster ride. So just get ready for the ride of your life. Live, love, laugh, and learn.